Let's take a look at the markets picture over in Kenya now. In the stock market, we had the benchmark NSE 20 share index rising 0.5% by the close of yesterday's session. That market just above 4,758 points by the close. The market still bullish, traders saying, and once the election petition is out of the way, they say that they may see it rallying further. Investors expecting a pretty smooth transition despite the hiccups currently at play. The main index, remember, has gained about 14.5% so far this year, adding to a 29% rally last year, driven by investors buying stocks on the back of strong results. Kenya Commercial Bank, the country's largest bank by assets, rose 2.6% to 40 shillings per share in yesterday's session. And then on the currency front, the Kenyan shilling firmed, helped by T-sector dollar inflows, and that after the weekly auction. Traders saying that players in the markets are, though, still trading pretty cautiously as the country awaits the verdict on an election petition challenging the outcome of this month's presidential election. We have traders saying that the shilling could rise above 85 shillings to the dollar if the Supreme Court strikes out the petition. The shilling, which is up 0.3% against the dollar so far this year, has been hemmed in the 85 to 86 range in the last 2 weeks, and that mainly due to the uncertainty around the petition itself. Right now, smack bam in the middle of that trading range at 85.85 to the greenback. Let's get into some analysis of these markets now with Rufus Mwanyasi. He's an independent analyst. Rufus, thanks so much for joining us this morning. Well, there we have it, a third straight sessions of gains filtering through to the local market. What are you making of the activity we're seeing right now?
Well, the market is showing some inherent strength, within it. And but largely what we're seeing is a holding pattern. As you correctly put it, is market is basically being held hostage, by the ongoing election petition that is still at the courts. Yes, we're saying the market is still split, just waiting for that resolution to come out. Then we may likely to see the stocks start picking up.
Amidst all the uncertainty, as I highlighted earlier, it's company results coming through pretty strongly that have acted as strong support. Rufus, what have you made of the earnings season thus far, and where does that leave you in terms of sentiment?
First of all, we think we think the good results that we've seen in the last 2-3 weeks from the banking sector alone, that's largely because of what the macroeconomic conditions that were largely stable last year. Rates coming down, inflation trending downwards to single digits, and that's why we had good profitability actually as a sector. The profitability went up as much as 17.5%, about $1.2 billion. But just to answer your question, I think our projection for the next 3 quarters remaining, we think the good results that we've had in this we've seen so far, it's going to have a contagion effect for the rest of the market. So we are likely to see more and more money coming in, particularly retail money coming in, feeding on this confidence. And as we wait for this election, the outcome of the petition, which has a deadline on Saturday. If whatever outcome, I think the market is really bullish, and I think whatever outcome it is, so long as the political players restrict themselves within the courts, I think the market is going to be free to really rally up here.
While the numbers themselves have been exciting investors, it's the dividends that have come along with those earnings reports and the announcement of those payouts that have provided added incentive. Rufus, looking at BOC Kenya, it's cut its dividend, and that despite announcing a 31.3% rise in profit for the year ended December. Now, the company is saying that a lot of that profit it's managed to rake in as a result of cost cutting as opposed to an improved economic situation within which the company operates. What have you made of the results and of the announcement of that dividend cut?
Yeah, first of all, you notice that they didn't really quite see any meaningful revenue growth, just under 7.5%. It means largely the results, the sales were quite flat, and we've seen this as a trend for the last 4 years. Its results have its top line growth has actually remained flat for as long as that period. Yes, we've seen a 33% jump in its profit, its pre-tax profits, and largely because of restructuring that has been ongoing for the last three years, going back to about 2010. So yes, I think Yes, we think that they've done really quite well in terms of improving their efficiency, particularly on the procurement procedures, and we also appreciate the fact that they did just a lot in putting a lid on their costs, and largely benefited from the stable exchange rate that we experienced last year. But going forward, I think the concern amongst investors is this is a model that is not sustainable because they can only cut costs as much. So I think the only pressure that is on the management right now is to find ways on how to to start seeing growth on the top line. Unless that happens, then we're likely to see investors really remaining skittish about that stock. And you've seen it's largely remained flat year to date at around 800. And as we speak, since the restructuring started, and the flat list sales that we've seen the last 4 years, the stock is still trading at 37% lower than the highs that we saw back in 2009. So I think what the market is trying to say is that, you guys, unless we start seeing some growth on the top line numbers, then we're not going to, put our position on that particular stock.
And are you in line with that kind of sentiment? Are you following the herd at this stage, Rufus, staying away from this stock, despite the fact that the share price has shed close to 7% a year over the past 1 year and is currently trading at 107 shillings?
Yeah, first of all, you have to notice that just from that fundamental aspect of it, it does not really inspire confidence into that stock, because we need to see some improvement in those numbers. And as you correctly put it, that that could be the reason why they cut the dividend, because if the numbers are not really adding up, and if the numbers are not really improving, then there's no reason why people should placing their bets on that stock. But however, what I'd like to say is maybe just as a second reason is retailers have largely ignored that stock because of the price. It's really pricey. At 100 shillings is way above what most retailers can afford. So this is just largely an international, an institutional type of play stock. So you know what? Unless they correct some of those they get back to finding ways on how to improve their profitability. And last year they came out and said they like to reactivate a mining license that they had, and they said they wanted to go back into mining carbon dioxide. Until that time, the announcement came out. Until this point, we've not seen any major steps towards that. So I think the market is really not inspired by that. Yeah. So I think that's why most people are choosing to sit out on that stock.
So we'll have to keep an eye on their strategy moving forward and the kind of development we see coming through from their end. Rufus, in the meantime, also making headlines this morning is the fact that we've had Diamond Trust Bank managing to secure a 4.2 billion shilling loan from the World Bank. And, it's the IFC specifically that's looking set to inject this, what equates to $50 million into Diamond Trust Bank, and that would eventually boost the lender's capacity to fund small businesses. Yes. What do you make of that announcement, and does that heighten the appeal of a stock like Diamond Trust Bank, of course that being a mid-tier player?
Well, first of all, I'd like to say that that's a trend that we've noticed. IFC has actually been pumping a lot of money into the banking sector, and we're talking to the likes of Housing Finance. Last year they gave them a loan, the likes of even KCB and now DTB. Well, what I'd like to say is, as you said, we're going to see more lending. The firm itself is actually in the process of expanding in the region, so I think they're going to leverage on that in terms of just boosting their their lending. So I guess from an investor's point of view, I think what we want to see is we want to see more aggressive lending, because it's really a mid-tier bank and it's not really as conspicuous as some of the big banks that we know. So we want to see more marketing. We need to see themselves more out there on the streets, so that they get to see. We need to see them really lending out to particularly to retailers and also to the corporates. So I guess for me it's just a wait and see how they choose to lend out on that money.